we've shifted the stance from accommodative to neutral as far as the monetary policy is concerned. I think this is mainly driven by our concern about global inflation that is picking up, especially on fuel and metal side. I think there is also a risk that this could be coupled with a strengthening of the dollar, and it could feed into significant inflation for our economy. So unless you believe that the food inflation is really, or the food deflation is really here to stay, I think I think your expectation would be more based on the core CPI, which has been very sticky. Now, why did we hold rates, though? I think it's because the only other reason to lower the rate, given what I just said about the inflation outlook, would be to try and narrow the output gap that's been created by the recent events. We think that both fast remonetization that's taking place, as well as the balanced budget, balanced in the sense of being austere, as well as reallocating to growth-focused capital expenditures, should actually aid in narrowing the output gap. And in fact, the way the monetary policy would work is by transmitting this through banks to the lending rates or borrowing rates for corporations. But much of this has actually taken place thanks to demonetization because of banks being flooded with easy money. So nevertheless, we await greater data to know whether the impacts of demonetization are going to be truly transient, and therefore we remain fully flexible, and therefore we've kept the rates on hold.